Back of weak Chinese economic data, which reinforced fears about the slowing global growth situation. Chinese retail sales grew at the slowest pace since August 2020, while the country's industrial output also disappointed. Bursts of the rise in infections of the Delta variant also remain a concern in the region. Over in Japan, the Nikkei share average declined by 0.52%. The Hong Kong market was down more dramatically, declining by 1.84%, while the Shanghai Composite Index weakened by 0.17%. US markets ended on a downer yesterday. Stock prices gave up their earlier gains on the back of a softer than expected August inflation print. US CPI rose by 0.3% in August on a month-on-month basis, while on a year-on-year basis, CPI rose at a slower pace of 5.3%, down from the 5.5% that was recorded in July. The Dow Jones Industrial Index declined by 0.8% to close at 34,577 index points. The S&P 500 ended the day at 0.6% in the red to end at 4,443 index points, while the tech-heavy Nasdaq fell by 0.5%, closing at 15,038 index points. Let's take a look at the indicators. Well, to take a closer look at the markets with me, I'm joined by Chantal Marx. She's the head of equity research at FNB Wealth Investment. Thanks very much for joining us, Chantal. So markets do seem to be quite subdued. Just explain why the lower than expected US CPI print hampered sentiment.
So the lower than expected CPI print yesterday actually saw the market tick up a little bit because the market was relieved that it might mean that the central bank has a little bit more room before it starts tightening monetary policy, which is usually bad for markets and for the economy as a whole. But the debate that it spurred was that, is inflation still transitory? Do they still expect it to just pass because of high base effects or low base effects last year? Or is it going to be around a little bit more permanently? The other thing that spooked the markets, of course, was the weaker than expected Chinese data this morning, and then also continued concerns that the Delta variant is going to result in weaker than expected economic growth over the next 6 to 12 months.
So apart from those, and there are quite a few themes you've mentioned there, what other themes are sort of captivating market players' imagination that will influence their behavior?
Oh goodness, there are so many. So I did mention Chinese data, but the broader Chinese narrative at the moment around regulatory intervention as well as common prosperity is really taking market participants' imaginations by storm, because there's a lot of questions around what they're actually trying to achieve. What is common prosperity? Does it mean everyone is prosperous or just everyone is the same? So there's a lot up for debate around China at the moment. And then, of course, the impact of the vaccine rollout, the pace of the vaccine rollout at the moment, as well as continued and renewed lockdowns globally, is still something that I think investors are exceptionally concerned about.
So with the current sell-off that we're seeing right now, where do you see possible investment opportunities, especially when it comes to South African Inc. stocks?
So the South African market generally is still quite cheap relative to its history, as well as relative to global financial markets or global equity markets. But it's quite nuanced, because a big reason why the JSE looks quite cheap is because it has a large exposure to resources stocks, where estimates going forward are very high in terms of earnings and cash flows. But now there's a lot of fear around commodity prices, which is also a theme that I could have probably mentioned earlier on. And if commodities prices are going to come down, you might see pressure come through in those stocks. But there are other areas that look quite interesting. In particular, I think the insurance space still looks quite undervalued. Most of the insurers are now getting to grips to how to model for higher than expected mortality. They're increasing their premiums, and we should see an improvement from those companies going forward. We also see new business margins holding up quite well. So I think that you could see a recovery, particularly in that space in the medium term.
Yeah. Now, Chantal, Signoff has been in the news of late. They're trying to pursue their settlement with creditors and so on. And we understand that they have a big stake in Pepkor. We understand that they sold off a big chunk, about 7.3 billion's worth, in order to help them to settle, their dues with their creditors. What does this mean for people who hold Pepkor shares? Should they be concerned? More so because as well, Techie Town, or the founders of Techie Town, are pursuing a liquidation case against Signoff, which means that company could just disappear as well.
So I think when it comes to the Pepkor business as a whole, it is very much insulated at the moment from the day-to-day running and the day-to-day issues that are being faced by Signoff in particular. So when you look at the sell down, what it's actually done is it's resulted in more shares being available to trade in Pepkor, which is actually a good thing. In market terms, we call it higher liquidity. It just means it's easier to buy and sell the stock, and that should be a positive for them. Another thing that will happen over the next few months is that Signoff hopefully will be able to pursue their settlement offer, and they will even further reduce their stake in Pepkor, because the claimants are actually getting a portion of claimants are actually getting Pepkor shares. This means that the free float will increase even more. And because you no longer have that pressure of that possibly taking place or that sell down taking place, it removes an overhang for the share price as well. So I think overall for Pepkor shareholders, it is a really good thing. I think the only issue, and you highlighted that issue, is the Techie Town, or the ex-owners of Techie Town's application to liquidate Signoff. Again, it shouldn't have a direct impact on Pepkor, but I think that their main aim is actually to get their business back, which is Techie Town, which is housed in Pepkor. I'm not sure whether or not they'll have a legal claim to that, but it's going to be very interesting to see how that plays out.
Indeed. Chantal, thank you very much for your time and your insights as always. Chantal Marx, she's the head of equity research at FNB Wealth Investments. We're going to go for a quick break.